Your bank charges you $15.65 a month, not for anything it does, for what you don't have. The fee disappears the moment your balance touches $10,705, and every month you sit below that line, you are paying the bank for the crime of being close to zero. You are not a customer down here. You are the product line. Nobody tells you the number. You could bank with the same institution for a decade, check the app every morning before you're fully awake, read every email they send you about ways to save, and never once see $10,705 written down as what it actually is. The price of admission to being left alone. There is a line where the bank stops charging you for existing and starts treating you like a person it trusts. Almost nobody knows exactly where it is, and the ones who've crossed it usually crossed it without noticing. The way you stop noticing a headache once it's gone. Your coworker Dana started the same month you did, same title, same desk row 2 seats down, same direct deposit landing on the same Friday for 6 years running. Her balance sits about $9,000 higher than yours most months, and has for years, for reasons that have very little to do with anything either of you did right or wrong on a given Tuesday. A parent who covered a semester of tuition she never had to borrow for, a first apartment that happened to be cheap the year she needed one. You'll watch what that $9,000 actually buys her, tier by tier, and it isn't what you'd expect, and it isn't really about the $9,000 at all. Below zero. This is the tier with a fee for arriving. You're $40 short at the register, or the rent auto draft goes through a day before the paycheck lands, and the bank doesn't decline it. It covers it silently and charges you $26.77 for having let it. That's the national average now, and 94% of accounts still carry the fee at all, despite a decade of headlines promising it was on its way out. If more than one transaction hits on the same bad day, the coffee, the gas, the rent, most banks still process the largest one first, which is the fastest possible way to turn one overdraft into 3 separate $26 charges before lunch. None of this is incidental, and none of it is a glitch the bank hasn't gotten around to fixing. The industry collected north of $12 billion in these fees last year alone, after Congress rolled back the $5 cap that was supposed to end exactly this. Somebody modeled that revenue on a spreadsheet in a building nowhere near your rent due date and decided it was worth keeping. Dana has never seen this screen. Not because she's careful in some way you aren't. She's just never been $40 short on the specific day it would have mattered, and the bank has never once asked her to prove that was skill and not luck. The first rule, at the bottom, the fee isn't punishing a mistake. It's charging admission to a room you didn't choose to be standing in, to people who mostly didn't choose to be standing in it either. Tier 1, $0 to $500. Somewhere above zero, a new mechanism starts, quieter than the overdraft and almost never named out loud. You deposit a check, a reimbursement, a freelance payment, a birthday check from your mother, the kind of money that's supposed to feel like relief the moment it lands. And the app shows the balance updating immediately, right up until you actually try to spend it, at which point some of it simply isn't there yet. A federal regulation lets a bank hold a portion of your own deposited money for a business day or more if your account history doesn't clear you for faster access. Yours doesn't. Dana's does. She deposits the identical check the same afternoon, same bank, same teller window if you wanted to compare notes down to the minute, and hers clears same day because her balance history has told the bank in advance that it doesn't need to worry. You stand in the parking lot afterward, checking the app, watching the numbers sit there, available but not available. Doing math on whether the gas tank can wait until Thursday. You've done nothing wrong here either. You've just never carried enough of a cushion long enough for the bank's own math to stop treating your money as a question mark the moment it arrives. The second rule, at this tier, the bank isn't holding your money because it doubts the check. It's holding it because it doubts you, based on a number you've never been shown and can't argue with, from a system that has already decided how much trust you've earned before you've said a word to anyone. Tier 2, $500 to $1,500. You clear the immediate danger zone, and a new, smaller cost quietly takes the last one's place. The monthly maintenance fee, $15.65 on average, charged specifically to the accounts that don't carry enough to waive it. Over a year, that's $187.80, extracted on a schedule from the people who could least afford to lose it, for the privilege of having somewhere to keep the rest of what they have. You start doing a specific kind of math you didn't do a year ago, whether it's worth moving $500 into savings, where it can't be touched, but also can't buffer an emergency, or leaving it in checking as protection against the tier you just climbed out of. Either choice costs you something, quietly, every month, and there's no version of the decision where the fee simply stops being deducted. Dana doesn't run this calculation because her balance cleared this fee's threshold before she ever noticed it existed as a threshold to clear. She found out it was a thing other people paid the same way you might find out a toll road exists. From someone else's complaint, not your own bill. The third rule, the fee at this tier isn't paying for a service. It's a toll charged specifically to the people who can't yet afford to avoid it, which is, when you say it plainly, most of what a toll has ever been on any road in any system built this way. Tier 3, $1,500 to $10,705. This is the long middle of the ladder, and it's where the bank's tone changes without ever sending you a message that says so. Fees you used to watch for start quietly not appearing on the statement. A credit limit increase shows up that you never requested, based on a formula that read your rising balance as a signal you didn't send on purpose. None of this happened because you got smarter with money over the past year. It happened because the number got bigger, and the number is the only thing any of these systems were ever actually built to read. You mentioned the maintenance fee to Dana once. At lunch, thinking it might be a shared frustration you could finally commiserate about. She looks at you for a second like you've described a foreign country she's heard of but never visited. She genuinely didn't know the fee existed, not because she's above noticing it, but because she crossed out of range for it before it ever had the chance to apply to her. And a fee that's never once touched your own account is very easy to not know is real, no matter how empathetic you'd like to think you'd be about it. The fourth rule, somewhere in the middle of the ladder, the bank stops asking you to prove anything. And you don't get a notification when that happens. You just eventually notice the silence and spend a while wondering if you imagined it. Tier 4, $10,705 and above. Cross the line and the relationship inverts completely. Banking becomes quietly free. No maintenance fee, holds waived on request instead of enforced by default. A phone call answered by someone with the actual authority to just fix the thing instead of reading you a policy from a script. This is what the industry calls relationship pricing, which is an honest enough name for it once you hear it. The bank wants a relationship with the money that's already safe and charges rent to the money that still needs somewhere to go. Dana has lived past this line for as long as you've known her, and in all that time, by her own accounting, she has never paid this bank a single dollar to keep her money there. Not once, not one overdraft, not one held deposit, not one maintenance fee, across 6 years of the same job you've both had. Meanwhile, every dollar you've paid below the line was a dollar that could have been part of what gets you above it, which is the part of this ladder nobody puts in the brochure, and the part that makes the climb slightly steeper every single time you pay the toll for still being on it. The fifth rule, at the top, the bank isn't rewarding you for anything you did today. It's simply run out of reasons to charge you, because the only thing it was ever really pricing this whole time was distance from zero. $10,705 was the number the entire time. The line where the bank stops charging rent on what you don't have and starts treating the fact of your money as settled permanently without asking again. The $187.80 you pay every year below that line isn't a separate cost from the climb toward it. It's the toll that makes the climb longer. taken specifically from the people who are still on it, which is most of how a person stays exactly where the fee found them year after year without ever deciding to. Dana never ran any of this math, the same way she's never seen the overdraft screen or the hold notice or the fee reminder email that lands in your inbox like clockwork. Not because she outsmarted the system, because the system was never built to notice her at all. It only has eyes for the balance, close enough to zero to still be worth billing, and hers stopped qualifying before she ever knew she'd been a candidate. You know the number now, $15.65 a month, or $10,705 once and never again. The bank was never going to be the one to tell you which side of that line you were paying to stay on.